Interest rates are not the problem. Waiting is. Everyone is blaming interest rates. Rates are too high. I'll buy when the rates come down, and this is not the right time. But here is the truth. Interest rates are not the real problem. Indecision is. Many smart, high-income professionals are delaying major real estate decisions because they are waiting for the perfect rate, the perfect price, the perfect market. That sounds cautious, but in reality, it can be extremely expensive. Because real estate decisions are not made in a vacuum, they are shaped by life, supply, income, timing, opportunity, and a long-term strategy. In this video, we are going to break down what is really driving real estate decisions in 2026 and why waiting for rates to drop may become one of the most costly financial mistakes many buyers and sellers make. Rates are not at the bottom, completely true, but they are not at the peak either. Interest rates are not low today. That's obvious. We are not at the twos. But they are not at the historic extreme, which was 18%. Markets move in cycles. They always have. We have seen very low rates. We have seen high rate environments. And we will continue to see rates move up and down over time. The problem is not that people recognize rates are high. The problem is that many are using rates as an excuse to avoid making a decision. Waiting for the absolute lowest rate is not strategy, it is speculation. Most wealth in real estate is not created by perfectly timing the rate cycle. It is created by buying the right property at the right stage of life with the right financial structure and then holding it through the cycles. You do not need a perfect rate to make a smart decision. You need a clear strategy. You could buy and then refinance. You could cash out and all. The other problem is supply. The biggest force supporting today's housing market is not interest rates. They are high. It is the supply. Millions of homeowners are locked into their mortgages in the 2s, 3s or slightly above. And they don't want to sell because selling means giving up that low payment and replacing it with a much higher one. That creates a major shortage of available homes. And when supply is tight, quality homes continue to attract attention even when rates are elevated. That is why many buyers are confused. They keep thinking rates are high, so prices should fall sharply. But that's not how this market is behaving. Higher rates reduce affordability, but low inventory protects values. That tension is exactly why waiting has become risky. Because while you are waiting for rates to fall, other buyers are watching the same homes, the same neighborhood, and the same opportunities. When rates eventually improve, demand may come back even stronger. And when demand rises against limited supply, prices may move before buyers are ready. Life does not wait for interest rates. This is the part many people forget. Life does not pause because mortgage rates are uncomfortable. You don't stop having kids. You don't stop growing old. People still get married. Families still grow. Careers still change. Parents still age. Children still need schools. Jobs relocate. Lifestyle needs still evolve. Real estate is not only a financial decision, it is a life decision too. Delaying a move for 1 year, 2 years, or 3 years may look safe on paper, but what is the cost? The cost may be living in a wrong home. The cost may be delaying your family's next chapter. The cost may be missing appreciation. The cost may be losing tax benefits. The cost may be paying someone else's mortgage through rent. I bought my first home at an 8.25 interest rate with only a $25,000 down. I did not have the money. At that time, that felt high. But 5 years later, when I sold the property, I walked away with $167,000. The rate did not create that outcome. The decision did. That's the lesson. The right real estate decision can outperform an uncomfortable interest rate. And if this kind of strategic real estate thinking is valuable to you, click and subscribe so you don't miss future videos on wealth building, market strategy, and ownership decisions. Waiting for the bottom is usually a losing strategy. Many buyers say, I'll wait for the bottom. But is the problem true bottoms are almost never visible while you're standing in them. They are clear only after the fact. The last major real estate bottom was around 2009. That was not a normal market cycle. That was a historic financial crisis. Before that, a comparable level of reset takes us back to extreme economic periods like the Great Depression era after World War I. Those are not ordinary buying opportunities. Those are generational disruptions. So if your strategy is to wait for another 2000 style collapse, you are not planning. You are gambling on an extreme event. Most successful real estate owners did not build wealth because they bought at the exact bottom. They built wealth because they bought quality assets, structured their finances intelligently, and allowed time to work. The market does not need to be perfect for the decision to be right. The real issue is financial alignment. For many high-income professionals, the issue is not whether they can buy. The issue is whether their income, assets, debt, taxes, and long-term goals are all properly aligned. Many people have strong income but poor structure. They may rely heavily on bonuses or stock compensation. They may keep too much cash idle. They may not understand how debt, tax benefits, inflation, and appreciation work together. They may be afraid of the monthly payment without understanding the long-term wealth equation. That is where strategy matters. A higher rate environment does not automatically mean you should not buy. It means you need to be sharper. You need to know, can this property serve your life for the next 5 to 10 years? Can the payment be structured responsibly? Can future income growth provide the picture? Can refinancing become an option later? Can ownership strengthen your long-term balance sheet? The question is not, are rates high? The real question is, does this decision move your life and wealth forward? Interest rates matter, but they should not control your entire real estate strategy. The real drivers of today's markets are bigger than rates. Supply is constrained, life keeps moving, market bottoms are hard to predict, and financial structure matters. Long-term ownership still rewards decisive, well-planned action. Rates will change, they always do, but missed opportunities do not always come back. So if you are putting off a real estate decision only because of interest rates, maybe time to stop waiting and start analyzing. Not emotionally, not impulsively, strategically. Because in real estate, the people who build wealth are rarely the ones who wait for the perfect conditions. They are the ones who understand the cycle, the structure, the decision correctly, and act when the opportunity fits their life. Subscribe for more real estate strategy, market insight, and ownership focused financial thinking. Because interest rates are temporary, but the decision to own the right property at the right time can shape your wealth for decades.